Okay, so here's something wild that nobody's talking about. Every single time silver prices triple in a short period, the entire economic system hits the reset button. And I'm not talking about small changes. I mean, empires collapse, currencies die, and wealth gets completely redistributed. Rome, 284 AD, silver tripled, the empire restructured. Spain in the 1640s, silver tripled, global dominance gone. Britain, 1919, silver tripled, the pound sterling lost its crown. And here's the kicker, it just happened again, like literally in the past few weeks. Silver just went absolutely parabolic. We're talking about a 50% surge in less than a month. The most violent precious metals rally we have seen in over 40 years. Gold's up too, smashing through all-time highs like they're made of paper. Now, if you're thinking, cool, shiny metal go up, you are missing the point. This isn't about silver. This is about what silver is screaming at us. People are losing faith in the dollar. And when that happens, history doesn't just rhyme, it straight up plagiarizes itself. See, gold and silver don't rally because people suddenly love jewelry. They rally because investors are running away from something scarier, fiat currency that's being printed like monopoly money. Think of it like this. Imagine you're at a party and someone yells, "Fire!" You don't walk to the exit. You sprint. That's what's happening right now in financial markets. The smart money isn't walking away from the dollar, it's sprinting toward hard assets. And historically, when this sprint begins, a massive transfer of wealth follows. The clock is ticking. Now, I know the financial system seems like it's designed by people who hate you. Derivatives, repo markets, quantitative easing. It's like they want you confused. But here's the truth. The patterns are simple. The game is rigged, but it's rigged in predictable ways. And today, I'm going to break down exactly what's happening, why it matters, and what you can do about it. In plain English, no finance degree required, because understanding this could literally change your financial future. Let's rewind to understand how we got here. Economies move in cycles. Boom, bust, boom, bust. It's like a heartbeat. And what we're seeing today, it's happened before, many times. But here's where it gets spicy. Look at U.S. debt as a percentage of GDP. In the 1980s, total debt, government plus private, was around 150% of GDP. Manageable, right? Fast forward to 2008, 400% of GDP. That's not a typo. We quadrupled our debt in 3 decades. Now, you might be thinking, okay, but we survived 2008, so we're fine, right? Wrong, because what happened after 2008 is where the real story begins. After the 2008 financial crisis, households were drowning in debt. Mortgages, credit cards, car loans, people were tapped out. So what did the government do? They basically said, don't worry, we'll take that debt off your hands. And they did. Household debt dropped. But government debt, it went vertical, like a rocket ship fueled by freshly printed dollars. Here's the thing. The debt didn't disappear. It just changed hands. It's like your friend saying, I'll pay for dinner, but then they put it on a credit card that's already maxed out. The bill still exists. It's just someone else's problem now. Except in this case, someone else is the U.S. government, and their credit card is the printing press. Normally, when you have too much debt, you face consequences. Recession, unemployment, economic pain. But governments have a cheat code. They can print money. So instead of letting the economy contract and heal naturally, like ripping off a Band-Aid, they've been printing trillions to keep the party going. It's like eating cake for breakfast, lunch, and dinner. Sure, you feel great now, but eventually your body's going to send you a bill. And that bill is called inflation. And guess what loves inflation? Gold and silver. Let's continue with gold's correlation, the canary in the coal mine. Check this out. Over the last 20 years, there's an almost perfect correlation between government debt as a percentage of GDP and the price of gold. As government debt skyrocketed, so did gold.
Why? Because gold is the ultimate I don't trust you asset. When investors see governments printing money to pay off unpayable debts, they bail. They move their wealth into things that can't be printed: gold, silver, real estate, Bitcoin, anything that isn't tied to a government's promise. And right now, that exodus is accelerating. But here's where it gets really interesting and a little terrifying. This is the velocity wildcard, the sleeping giant. You'd think with all this money printing, we'd seen massive inflation already, right? We did see some, but not as much as you would expect. Why? The velocity of money. Think of it like this. Imagine money is water, and the economy is a water wheel. The wheel only spins when water flows. Right now, we've got a massive reservoir of printed money, but it's not flowing. It's sitting still. Most of that money is locked in financial assets: stocks, bonds, real estate, Bitcoin. It's not circulating through the real economy. People aren't spending it on groceries. It's parked in portfolios. But what happens when that dam breaks? This is the coming flood, when assets unlock. Here's the nightmare scenario keeping economists up at night. Trillions of dollars are sitting in overvalued stocks and bonds. When confidence in the dollar truly cracks, and silver tripling is a massive warning sign, those assets will get sold. And when they do, all that money floods back into the real economy. The velocity of money skyrockets. And when velocity meets massive money supply, inflation on steroids, we're talking about the price of everything going up: food, energy, housing, healthcare. And this is exactly what happened in every historical example where silver tripled. The pattern is eerily consistent. Look at the historical playbook. It's all happened before. Rome debates their currency, silver spiked, and Diocletian had to completely restructure the empire. Spain flooded the world with New World silver, prices tripled, and their empire went bankrupt. Britain, after World War I, saw silver triple, and the pound lost its reserve currency status. Every single time. The pattern is precious metals surge, confidence collapses, system resets. And we're watching it happen in real time. So what this means for you is the wealth transfer. We're entering the largest wealth transfer in modern history. Most people will be on the wrong side. Cash? Inflation eats it. Overvalued assets? You'll get crushed. But position yourself in hard assets and inflation-protected investments? You can thrive. This is pattern recognition. So here's the smart move. Positioning for the reset. Diversify into real assets: gold, silver, commodities, real estate, Bitcoin, things that hold value when currencies don't. Winners during resets aren't those with the most dollars, they're those with the most value, and value flows into scarce things that can't be printed. The silver surge is a signal, a warning. The rules are changing. And here's the urgency. The window is closing. By the time everyone realizes what's happening, it's too late. The best time to position yourself was 5 years ago. The second best time is now. Once velocity picks up and inflation takes hold, the window closes. Hard assets become out of reach. Silver tripling isn't the end, it's the opening chapter. So this is your call to action. Take control. Educate yourself. Understand these patterns. Take action. Don't let this wealth transfer happen to you. Make it happen to you. Like, subscribe, and comment what assets you're moving into. The system's rigged, but the patterns are predictable. Know the pattern, play the game. See you in the next one. Stay sharp.